Good morning and welcome back, fellas, to another session of Almus Market Mornings, your daily dose of financial updates with me, Shikhar Garg. Now, well, markets have been turbulent, and or as we say, the market's favorite term, volatilities have remained high, stoked majorly by geopolitics, which looks to be an unending process while China and its COVID roller coaster rides continues. Another major reason continues to be the tightening cycles by the central bank. Now, in this, BOJ, in its main monetary settings, looks to keep things unchanged, while the Fed, when it comes in the next week with its FOMC update, is expected to bring a hike of 50 basis points by a lot of market participants. Are we heading towards the end of Powell put? Now, this is what we need to see over the period of time. But Pankaj, what do you think? What's going on in the markets? What are the updates for today?
Hey, thanks, Shikhar. I think Powell put indication has come much longer, much before, and market is playing out that theme very well. And that's clearly evident in a dollar index. Now, if you see the dollar index, which basically has such a past pandemic high and aims at now on a 2016 high of a 103.65. So it looks like that if we move around those areas, that would be a decadal high also. The change statement of Lagarde, where she was talking hawkish, but she was saying that US has got a different kind of inflation and we have got a different kind of inflation, and that's being played by market very, very well. Let's coming back to equities in a season where markets were driven more by earnings report, which had been mixed. Yesterday's session was positive because Microsoft, Facebook, and Visa numbers have been good, and the sentiment has got improved. What is being observed that whenever the numbers are bad, market is probably giving them a penalty or maybe penalizing those bad performers very much, and even they are appreciating the good results. But lots of focus has been on a currency market where dollars continue to its surge and its course of a biggest monthly gain since 2015, January 2015. Now it's almost certain that in the next week they would be raising rate by 50 basis point, but market is also pricing in that by end of this year the total cumulative rate increase would be 250 basis points. So that basically means after this meeting there would be, I think, 5 meetings left, and in all those 5 meetings market would be expecting that there would be at least 50 or 25 basis rate hikes will be there. Now, if we see that the euro has been now dealing at 1.0540, it has broken through the important support of a 1.0635. I think it's coming back on a when the news that the Russia stopped gas supply to Poland and Bulgaria, and they are saying that we will be accepting payments only in ruble. So that's killing the euro. The other currency which is in the news is yen, where we continue to hear conflicting comments from the current and ex-Japanese official. The Finmin continues to harp on a currency moves being too rapid and not desirable, but there is not much of an action. We are dealing at a 129 in the dollar yen. If it crosses 130, then there would be another leg of a up move. What we have seen in the bond yields are now range bound before FOMC meeting outcome. They will be seeing two things: how the rate cycles being planned and how the balance sheet tightening would be seen. So that will give a further impetus. But if you see that 2-year bond yield, 2-year G-Sec yield has already, US Treasury has already touched 2.75. Market looks like won't be going much beyond that. They would be like to see further comments, and they would be looking at the upcoming inflation data. Rupee had been remained relatively unaffected by the volatility that has hit the currency markets in general, thanks mainly to the constant intervention by the PSU banks through central bank through PSU banks. While the increased demand from higher oil prices and higher import in general should have led the rupee lower, but it has also been balanced by selling ahead of the expected inflow of LIC IPO, and there could be a carry trade also getting into place. Even as other EM and Asian peers catch up with the general dollar strength, INR continued to show its resilience, and USD INR is staying below its all-time high of 76.97. Yeah, that's all from me.
Okay, so what we do here is a decadal high for dollar index. Now, a decadal high does mean there has been some thing fishing around here and there with a lot of major currencies. A 250 basics or 250 basis point hike for calendar year 2020. Now that's significant because what neutral rates can the economy sustain are still a question, and such significant rate hikes have only been seen way long in the history. So 2.75 as the levels mentioned for the 2-year benchmark continues to be a good yardstick to see what sort of expectations does the Fed continue to have. On the domestic front, as Pankaj mentioned, just like Indians, our currency is also a bit resilient as we see against the EMs. So let's see how the PSUs and our central bank continue to manage the risk when it comes to currencies as well, even though their mandate is to manage inflation instead of currencies. So playing a good part in managing the volatility, RBI is doing good. Let's see how things goes ahead. Till then, we take adio and we see you again tomorrow. That's it for today. Thank you.